Conair? Or no?
No.
Conair I have seen.
Okay.
That's a good one.
That's the one you pick. That's the
love
movie you
Con Air.
pick. Con Air. Oh yeah, I'll go back in time and watch Con Air for sure, dude. Yeah, that's a classic, bro.
Escape from Alcatraz?
It's like, are you
No.
kidding? Con Air.
Oh, the,
Ah,
All right, are we going?
welcome to the podcast.
Yeah, welcome to the podcast.
Dude, I just terrible start. Now I'm upset.
All right, I'm sorry.
Con Air.
Well, we've got a recurring guest on today. We thought, who's the most handsome? Who's the most, the strongest guy I've ever seen? in
Here's
my
the
whole
deal.
life.
The market's tough right now. You need a big, strong mortgage lender.
to kick the market's ass.
Oh, boy.
And this guy's going to do it. Chris Sims with Forward Mortgage, everybody.
Welcome to the
Glad to be
podcast.
here.
Thank
Glad to
you,
be here.
Chris.
Thanks, guys.
Thanks for coming back on, man. We
Heck yeah.
appreciate it.
Absolutely.
Happy to have you.
So a
Grateful to have you.
little bit different scenario now, because last time we had you on, interest rates, 3%. We were just talking about this, like how fast it changed. Now where are interest rates at?
Ooh, so interest rates, it depends on your situation and the type of financing you qualify for. But
Interesting question, you could say.
yeah,
Shut up, Josh.
Sorry.
they're everywhere. So interest rates, a blanket approach to describe where interest rates are right now for a conventional home buyer, you're looking in the 6% right now. We did see 7s and we touched the 8s based on maybe lower credit scores, something not credit worthy within the profile to get approved. We did see some 8s. Recently, we just saw a decline in rates, so now we're back in the 6s. And some qualified individuals will be in the 5s, the high 5s, right now.
High fives. That's a sick.
High
That was
5s,
sick,
yeah,
dude.
that's actually,
Yeah. So what we kind of wanted to talk about today is, because we hear all the time, I'm not buying right now. Interest rates are too high. So what's it really like to buy in today's market? Let's be honest about it. Is it a buyer's market? Should we be waiting? All that kind of stuff we'd like to get into. So
yeah, great question. And what I'm hearing, you guys are boots on the ground, and with the resources that I can offer and just the data, what I'm seeing is we're shifting more into a buyer's market. And so coming into a buyer's market, it's a great time, especially now for first-time home buyers, getting out of that rental, getting out of mom's basement, getting into a house and building equity. So we're shifting into more of a favorable buyer's market. And so what does that mean for a buyer, right? So like history is how we can tell the future a little bit. So what we just experienced here in the last couple months, starting back to, probably when we first talked on this podcast, was around that March and April time is we're seeing houses being sold for higher than the listing price and at multiple offer, and buyers were losing out. And so what do? They go rent. They go pick up that 6-month or that 12-month lease. Well, that's probably about 6 months ago now. So now is a great time to get out of that lease, get into a home worth owning, and save money and compete for an offer with a good payment versus renting.
Mm-hmm. Yeah. People are you heard it all the time. Like, I'm so glad I bought when I bought. Like, I got such a good deal. My interest rate was great, and it's like, well, yeah, your interest rate's great, but you spent $30,000 more than what you would have to in a normal market. So
Right. And then too, so not only that, because what we were dealing with at that time was like buyer fatigue. So like these guys were out like showing houses, and you can't show a house fast enough, and writing offer after offer after offer, having them be like declined. Like, sorry, we got one for even more than that, and we got one. So you got buyers writing offers well over asking price, not asking for a home inspection, like all that type of stuff. So very favorable to the sellers, but still having them be declined because they weren't good enough. Well, fast forward 6 months, and that's different. Like we recently, like that's just the best example because it's a very common home that would have sold, like that twin home. Both twins, I guess, like those 6 months ago, those both would have sold for well over asking, no inspection,
Yep.
and now we've got an offer a week later or whatever. But it's just different.
Yep.
Yeah.
So buyers are now much more in the driver's seat to able to dictate terms such as price. Do we want to have an inspection, and then what do we want to ask for on the inspection? closing date, all that type of stuff. So much more favorable for the buyers.
Yeah, and it allows, I believe it allows you guys, the realtors, to do your job effectively. And what you're good at is to help advocate for the buyers to get the best negotiation out of the home. And you can do that with a little bit more patience and time versus hurry up and rush this through because we have 10 other offers coming through, and you need to decide before we go to bed tonight. You can't sleep on it. You have to decide right now. And if you don't, well, you don't get the house, and that's what we were looking at. Now, our days on market is a little bit longer versus back then. And days on market, you have the ability to take a little bit of your time, not too much now, but you do have a realistic amount of time to have a conversation with your realtor, with your mortgage professional, to talk about the options that on the house to make it work for you guys or work for the client.
And then too, it's like, okay, so now I'm a buyer, and so 6 months ago I could have bought this house for $240,000, whatever, at the 3% rate. Well, now that rate's at 6%, but now I can get it for $225, we'll say, or whatever, just kind of numbers, some stuff, general stuff that we're seeing. Well, it's like, okay, well, what if the interest rates go up? It's like, well, then you're probably better off than waiting, right? And then you're still able to build equity in this home. You're not giving money away on rent that you're never going to get back. Well, what if interest rates go down? Well, then refinance. It's pretty painless. Pretty painless process. Basically, in my experience, you tell your lender you want to refinance, you throw some paperwork at him, and then he lets you know when to come in and sign and whatever. So that's pretty easy. And then, so like the only really way to lose as a buyer is by not getting in the game, right? Because like, okay, well, I'm just going to rent for another year.
Yep.
And then, well, that's now 12 months worth of equity that you're not going to get back. And then it's going to be the same thing next year. Well, rates are high. Well, rates are low. Well, rates are high. Well, houses are expensive. It's like, you got to get in the game, baby.
Yep.
Yeah.
If you're a first-time home buyer, the best time to buy was yesterday. I feel like it's always that case. Like no matter what interest rates are, they're better than 100%.
Well, and you hear that all the time, like with like lake property or different investments. Oh man, my grandpa could have bought this piece of property for $30,000, and now it's $200 or whatever. It's like, well, that's real estate, man. You gotta get in the game to be able to take advantage of it.
Right.
And then too, like big picture, like we help people build wealth through real estate. So the average net worth of a homeowner is, I don't know, like $250,000 or something like that. The average net worth of a renter is
$7,200.
$7,200.
Yep.
So it's like, well, what if it's, I don't know. Like you gotta get in the game. There's no other way to do it. And there's all these people that want to help you. There's the realtors that are more than happy to help you. There's lenders that it's like getting a loan is not a scary thing. Like, because if you look at, like, no matter how scary he looks, he's a super nice guy. But he's just like, he's here, like we're all here to help you reach your goals.
Yep. So like one thing I hear all the time is, well, I want to, I'm a renter. I want to wait till interest rates drop.
Yeah.
Maybe sometime next spring I'll buy or something like that. What do you think what, is that a smart decision? Like, what is that? Because to me, it's like, no, like that's just more time you're spending on paying 100% interest versus whatever it is.
Exactly. And it's really individualized, to the client, to the buyer that's looking to get into the market and buy a home. And so that's where you as realtors, us as mortgage professionals, we have that intimate conversation about their end goal. What does it look like when? What does it look like when you have that house? What does it look like when you have a net worth of $250,000? What does it look like when you have that nursery now that you're preparing for having a baby? You need that 3-car garage because your wife's going to take up the other stall. So you need another 3-car. You need a 3-car versus a 1-car that your rental space can only provide. And so it's just working backwards from the end goals and then finding out, okay, if you were to do another 12-month lease on, let's say $1,500. So if 15 times 12, what are you looking at? What is that, about $18,000? Like, oh boy.
That's quick math right there.
And so
there's no way that's his first time doing that. Yeah. Okay, pal.
So then you just ask, what I do is I just ask leading questions, and just to get him thinking. I'm not selling nor am I persuading. It's more finding out what their true end goal and result or goals are. And if at the end of it they realize, yep, renting is the best, and we just, they answered correctly, or they answered honestly with all the questions, then that's the best thing for them. And so an example is when I have those conversations, I go over like a cost to weight analysis. It's part of a total cost analysis, and it breaks down what is the opportunity lost in the cost to wait. And so we pick a closing day before Christmas, and we find that bi-level twin home for around what, 225 now? 220?
Yeah, I would say.
Yeah.
And are we seeing typically in this Q4, the winter months when snow's on the ground, typically in my experience, we're seeing that house prices are a little bit less than they are in the spring in the hotter months.
Definitely.
Seems less competitive.
Less competitive. You're going to get it for at asking price, or get a lot of money in closing cost credits from the seller to help with closing day. Well, let's say you get $6,000 in seller paid concessions to help with the closing costs on the home, versus spending $5,000 to $10,000 more for the home in spring and summer. So now you're at $230,000, $235,000, and you're not going to get concessions because if you like the house, or if the client likes the house, more than likely 3 to 10 other people like that house too, and so they're all coming to the house together, and more than likely you're not going to get seller paid concessions.
Right.
So right there, that difference is an average about $10,000. So the question really is like, do you want to pay $18,000 on rent, or do you want to save $10,000 if you purchase a home before Christmas, and now you're owning something versus throwing your money away? So it's really just having that conversation with people. And so obviously we're in this game, we're in this industry. We see a lot of high level people making moves in this industry. How we communicate what we know to clients is really the success to our industry, and help them bypass anything with social media, any naysayers, any negative comments, and really having an honest conversation with a professional. It's going to help them, and they'll be glad they at least had the conversation. So when they're ready, they know full force what to do.
100%. We talk about that all the time. Like we do like a lot of personal growth and all mindset type of stuff, and it's so often like just our own limiting beliefs, our own fears. Like in the Bible, it says "fear not" about 50 times or a lot. So it's like, do you want to get it? Like, if you want to get into a house, like let's make it happen. And it's like, I don't know. If you really boil it down and ask those questions as a professional, a lot of times it just boils down to fear, which is not a good reason not to do something.
And you establish, you get to that last piece of the onion by peeling them back and getting to their true issues or their true fear by building rapport and that trust up front. And that's honestly what it's about. Is when you have that rapport built with your clients and they tell you exactly why, we're able to do our jobs much better with precision based on how to overcome their challenges.
Yep. So, and it is scary too. Like, especially if it's your first one. I think we forget because we do this every day.
Yeah.
But yeah, I remember buying my first house. It's like, whew, I have no idea what I'm doing. Like, I just want to like find someone and just be like, please help me. Yeah. So yeah, I mean, like, find someone that you trust and that can help you and be honest about it.
Because then too, like, you have those conversations that no one has ever said to me anyway. Like, oh man, you're so slick. I really shouldn't have bought that house, but you talked me into it.
Right.
Or like, oh man, I wish you never would have called because you talked me into selling. It's like, it's not the job. The job is to like help people solve their problems. Right. And help, like, you can have whatever you want as long as you help enough other people achieve what they want. You don't get it by just taking stuff from people. You help it. That's our value, is in solving problems for people.
Exactly. When the conversation starts from coming from contribution and expecting nothing in return, well, greater things happen and we all win.
100%.
So can you think of a situation where it like wouldn't be a good time to buy? Like, obviously if you can't get approved, there's nothing you can do, but you can still figure out that roadmap on how to get approved. But let's say a person there's nothing stopping them from buying. Like, can you think of a reason why someone would want to wait?
Man, it.
Well, maybe potentially if they're not going to be there to. Sorry to interrupt, but
No,
I thought maybe if they think, and that's always historically been the thing. Like if you think you're going to be in this house less than
Sure.
5 years,
Yeah.
you know,
That's a good
maybe.
point.
And it's actually been kind of shrunk. Like even I helped a client, like he made money after a year in his house just because of the way the market was.
Yep.
But like historically, it's somewhere in that 3 to 5 year range. So it's like, yeah, if you're thinking you might potentially want to sell, because like when the market's going up, it's no big deal. But if the market is kind of stagnant, if not dipping a little bit, then you could get burned potentially. So that could be something. But what is also part of the conversation of like, hey, are you thinking about trying to move somewhere else out of state or out of town or whatever?
And
That could be something.
yeah,
But then the other thing too is like, well, if that happens, like, you could rent it.
Yeah. Well, and
I
then
get-
too,
I
and,
guess
and,
some
and
people
I know,
don't
and
wanna
I
do
know,
that.
but or two, like, well, okay, so say if you're only here 2 years, well, $1,000 a month in rent times 24 is, I'm just kidding, 24,000.
Math guys.
Woo! Big math pod. You know, so that's 24 G's that you're not getting back for sure versus, you know, and then being able to have your own place for a couple of years. But that's a scenario, not to be like, there's absolutely no reason not to, you know, because there may be out there, but that's one that came to my mind.
yeah. When you have an opportunity to build wealth, why not?
Right.
It can be scary up front, but then you adjust your finances accordingly, and that's one less night out to eat a week. It's one less coffee in the morning that you have to wait an hour in the drive-through to get. You know, it's adjusting your finances to create your net worth for the future, and your future self will thank you. Honestly, like there's some circumstances. You know, there's some people for some reason. You know, when it gets darker out, I'm seeing a lot of divorces. Like, not to get gloom and doom here, but I'm having conversations with divorce about clients that are going to be divorced. Well, there's rules and regulations and actual laws around home ownership while you're married to your soon-to-be ex versus if they are legitimately an ex and get into real estate in North Dakota. What does that look like? So that would be one reason to wait versus jumping in both feet while you're still married. Sometimes people are getting out of bankruptcies, so there's a seasoning period to wait to get into home ownership. And so then again, we work it backwards to find out when is the right time based on the seasoning requirements of what you're qualified for. You know, there's circumstances where they know they're going to get a promotion. Well, if they are going to get it promoted, it's a guarantee in 6 months. Maybe it's worth it to stay in that rental month to month, not sign a lease, but month to month on a new lease, and wait for that promotion so they have more purchasing power for the house they really want for their 4 kids and their wife or whoever. You know, just being ready for that. And that's where going back to our that initial conversation, build rapport and find out what does your goals look like? What does success look like when you buy a house? And then we just have those conversations. So
Should we start giving marriage advice, do you think?
We do legal advice.
We've given legal advice. What else?
Medical advice.
Yeah.
We've done all kinds of stuff, but who knows, man?
One-stop shop,
We'll
maybe.
see. We'll see.
No, that's cool. But yeah, that's so often the conversation right now. It's like, well, I'm gonna wait. Well, it just doesn't click in my brain how like you couldn't get into a house fast enough a minute ago, and now you're just gonna put all your home ownership on hold and just see,
Yep.
only to then get back in that same, you know. But
Yeah.
it's like ultimately, yeah, if you want to buy a house, if that's a true goal, if that's something you've decided you want to do, like there's professionals that can
Yeah.
help you build that roadmap to figure that out.
yeah, and if it's the interest rates, that's the true issue. Man, that's an easy one. Like recession is meant to correct itself, to correct the economy. Well, through the correctiveness of the economy, interest rates have to come down. So if the fear to buy at the interest rate now, you're still going to get to have the house and you can save the equity or build the equity plus also save for the purchasing power later. You can always refinance later, and now you still have a house and equity. So what is the term?
Oh,
Date the
you
rate.
date the rate, marry the house.
Exactly.
I see it, dude. Every single realtor that I know on social media has posted that.
It's true, though.
But it's very true.
Real litter.
Realtor.
Yeah.
Well, and another thing too that we've kind of chatted about is in today's buyer's market, like we do have more negotiating power. So maybe we can ask for seller paid closing costs like we spoke about. And part of that can be to actually buy down your interest rate. How can you kind of explain how that works?
Yeah, I'm glad you brought that up. So when there's opportunity when you get into a house that you can buy down the interest rate. So you can do a typical buy down of the interest rate at a percentage of the loan amount, and those dollars can go towards buying down the interest rate, which saves you per month and interest rate for the lifetime of the loan too. So you can use upfront dollars today to save interest rate dollars later, which and so right now, if you have a conversation with your lender, and a lot of clients that I'm under, in my experience, talking to other people that have bought and sold homes, one of the most common things that I'm hearing when I finally have a conversation with them is, I wish I would have known about buy down options because my lender didn't explain this and didn't do a total cost analysis of par rate versus buy down rate versus what I'm expecting to be in the home for, and just giving me the full picture of everything. I just did what they told me to do. I hear that, I cringe, and I'm like, oh, we're about giving options, and we don't decide for them. Right. They pick the path that's best for them based on what they want to do. So a buy down, using seller paid concessions or seller credits to buy down a rate, you could be at a par rate, which is, when a par rate is you pay nothing for the rate. You go in, you pay nothing. Now a buy down would be, okay, if you're at 7, let's say, and you want to get down to a 6.25, so you're saving 0.75% in rate, how much does that difference cost? And so that's where the relationship with the realtors and the client, and we come a team and say, okay, it's going to cost X amount, let's say $5,000 to buy down the rate at 0.75%. Well, on this $300,000 house, 0.75% is going to probably save you right around $62 to $75 a month. Is that worth it? Well, we look at how long you're going to be in the home. If you're going to be in the home for 2 years, maybe not, because your cost to recoup isn't going to be there. But if you're looking at 5 years and beyond, more than likely that makes sense. So now they get the home at a rate that nobody's getting these days, and you're using somebody else's money to do it. So that's the typical buy down. There's a 2-1 buy down or a 3-2-1 buy down. There's options out there to basically lease your rate today, knowing that it's going to go up later. So a 2-1 buy down, basically what that means is if your interest rate is 7, well, we take 2 off of that, so you can buy it down with the seller pay concessions, and we use that money to buy it down 2% for the first year. So there's the 2. The next year, we buy it down by 1. So it starts at 7. That's your initial rate lock. The first year will be 2 percentage points off, so at 5%. The next year will be 6. And then year 3, your interest rate's at 7. Well, usually within those 3 years, more than likely you're going to refinance. You can still use that money that you got from seller paid concessions to buy down the interest rate, and now you save that equity difference of whatever the rate is at and the payments at versus what it would be at 7. And if you have money left over, say you're going into year 2 and you want to refinance, you can use a portion of that seller pay concessions towards your refinance, lock in a 30-year term or whatever term you like to get a better interest rate. So today's market, if fear of interest rates are out there, now is the time to have that conversation with your real estate agent and negotiate buy downs, whether it be a 2-1, 3-2-1, or a straight up buy down.
Yeah.
So those options are definitely out there.
Yeah, that's wild.
And I don't know, I feel like it just comes back to like you hear interest rates and it's like, is that really the issue? You know, like, is that really what's holding you back? Right. And I mean, I'm sure it is, but like sometimes because that's what people are constantly hearing, and they don't know the stuff that we know, and stuff like that. So,
but who are they talking to?
Right,
and where are they getting their information? So if they're just scrolling through their social media, it's like, oh, this sucks. This is scary. This is whatever. But if you truly like committed, like I want to buy a house, like, well, then talk to the pro.
Yep.
You know, like take
the pro is Chris Sims.
Take health advice from somebody that's healthy, right?
Yeah.
Take
bring your car to a mechanic. Same thing. You know, bring your taxes to an accountant. You know, we're here to help people buy and sell houses. So,
Yeah, buddy.
have you guys been hearing anything about a housing bubble, where the other fear is that prices are too high right now, and they would either come down next year?
I haven't.
Yeah.
I mean, I guess
Nobody's
like
approached me
other
about a
parts,
housing bubble.
like other parts of the country, I've heard that is something that people are scared of. Like, but I feel like in Fargo,
Yeah.
I mean, I guess I don't.
And it's like when you hear bubble, like if you think of places like wherever, pick a place, but even
New Jersey.
New Jersey. Okay, so like, thank you. So even property values quickly go up 20%. You know, well then they're may come down 20%.
Right,
But here, if
exactly.
they've been coming up, you know, ratcheting up slowly, like there may be a correction where it's like, you know, their house prices may plateau, prices may dip a little bit, but like some kind of a market crash, like what happened in 08?
That's exactly it. That's the conversation. History tells us the truth, not just speculate. So in 2008, 2009, and into 2010, Fargo Moorhead area, we didn't see we didn't see the appreciation of homes impact us, or appreciation and depreciation of homes really impact us here in our market. We had Sanford coming in the market at that time. We had Mid-Continent coming in, competing with Cable One at that time. So we had a lot of factors really stimulating the market with new job placement, new constructions, developers giving up land to home builders. You know, there's a lot of area that was been taken up to expand our community. And really what we saw in 2008 to 2010 was home prices or home values were still going up year over year during one of the worst economic crises in our lifetime related to the real estate market. And so if people think doom and gloom right now, no, that is absolutely not the case. So like the interest rates may be one fear, house prices may be another fear. Well, history tells us that's not an issue. It's really just your fear of overcoming the facts. And the facts is really buy a house, provide equity, or provide net worth for your family, and your future self will thank you.
Right.
100%. 100%.
Yep.
It's a pretty good button to put on, don't you say?
I would say so. Yeah. Thank you so much, man, for coming on again.
Yeah, glad to be here.
When you're back on the pod in 6 months, your interest rate's going to be 12% or 3%. What do you think?
Man, great question. Yeah, really, I'll sum that up. So we just, the Fed's just announced a interest rate hike here last week and a half. Are we going to see another one? Yeah, we're going to see another one. It's probably going to come before March of 23. After that, we're going to look at some stability. Looking into September is what we're hearing. That once things normalize, September is usually going to be about the time where we're going to find out where interest rates are going from then. But nobody knows after that.
Interesting.
So,
Heck yeah.
Cool. Well, thanks, man.
TBD.
Good episode.
Definitely TBD.
Cool.
And the thing is, day by day, it could just dip. But that's where we'll just get the word out and let everybody know that interest rates are coming down. So, never know.
Yeah, buddy. Well, thank you for coming on the pod, man. We'll be back on soon.
Yes, thank you.
Watch for dicks.
Thanks, guys.
Shake a bug.